What's going on, traders? How are you doing? In this video, I'm going to be showing you how to trade the markets using a simple price action. And before I'm going to show you guys my live trading session today, I just want to say, please don't judge me on the second trade. I know I should have known better, but at the time I thought it was really worth the risk. So what we have to do first is we need to identify the current market structure. And today, right from the get-go, market started with a downtrend move. We were making lower highs, lower lows, and then eventually market sold off in a big fashion. You guys can see this is a very strong 90-degree move, and we had a second leg to a new low. So my first initial instinct was to draw the short-term trend line so I can follow the price action trend line rules. And I was surprised that after such a 90-degree strong move, all we had was this tiny consolidation and then move to the second leg, because normally when you see a strong sharp move like this is looking very strong, but this is not sustainable for the long term. These 90-degree moves, they will pull back to the EMA or straight up reverse. And in this case, it didn't happen right here, but it happened after the second leg, and we ended up going in the opposite direction, twice as strong. So after we have a break and a new low, from this point on, I'm thinking that this downtrend played out and we are pushing higher above the EMA. So I have to draw the short-term trend line once again, just to know what are the trends, and when I have a break and a new high. After a break of a trend line, prices will attempt to make a new extreme, and it did happen right here. Now we have a new high right here. We have a first entry long, pullback, second entry long, but we don't want to go long here because this bar is a horrible bearish looking bar, and if we are interested in going long, we want to see a nice green candle in our direction. And this was a too bearish bar. There's no way you put your stop order above this bar. Plus we already have a break and a new high, so this uptrend played out. So I wasn't really looking to go long here yet. Prices made a depletion move up and then instantly reversed down lower. Now the thing that I noticed here was that the prices created a double top right here in the direction of a downtrend. And you guys can say that, but Thomas, this is not a perfect double top. Well, that doesn't matter. The important is that this is an area. The lines don't have to be perfect. What's important here, this is just an area where the double top was created. And you guys can see we pushed above the EMA. So once we pushed above the EMA, that's when I was starting to get the feeling that we may have a bigger pattern here, because you know, this uptrend played out and now we're once again resuming into this previous downtrend. So this is where I started looking for my downtrend. At first I was looking for something like this, but I couldn't really make it fit, and I ended up drawing it something like this. And this is normally how I draw the trend lines. From the very first few swings, you guys can see that these lower highs are coming down in the geometrical pattern, and the trend line got confirmed right here. So it looked to me that this is a valid downtrend. We made a move down, we reversed higher, and then we're fighting strong resistance and we're pushing below EMA. And this is a big bearish bar, and a lot of people, you know, just started selling the market. We pushed below the EMA, and once we had this nice bullish bar, I knew that a lot of traders are going to be trapped going long way too late after the break and a new high played out, this uptrend played out. So when we have a nice bearish bar below EMA, look how nicely EMA is holding. This is a nice bearish bar coming off the double top right here, and the trend line looked valid at the time. This was the first trade that I took. Unfortunately, we quickly reversed. This is why we only go for a scalp, because we are only interested in taking the small profits. I put my stop loss one tick above the signal bar. In case I'm wrong, I don't want to give more money back. I want to cut my losses as soon as I can. Market started running up higher, and as we were pushing above the EMA, I wasn't really taking this uptrend seriously yet. What I did, I extended this double top, and I was probably banging my head against the wall here, because I was really still believing in this downtrend that we're gonna have a failed break higher and then make a second leg to this new low and test the low right here, because this is what I was looking at. Once we broke below the EMA, I was looking at the move down like here, and the same thing I was looking for the thing to happen right here. I wasn't really focusing on this uptrend because you were starting to get away from the EMA. This is a failed break higher a little bit. I took a short right here, a nice bearish bar, quite a small one, so the risk here isn't too bad and the reward would be good. And you want to really take a chance on these trades a lot of times because you can catch a good runner on these. But it ended up stopping me out, and then it ended up going exactly on the one single bar, exactly where I thought it was gonna go, and even lower. And damn, I don't think, you know, I could have predicted this. But looking in hindsight, I probably should have been paying more attention to the uptrend. There was just my gut feeling was telling me that we may pull back, and this is why you really want to be a really experienced trader when you want to rely on your gut feeling, because I had a losing trade right here, and I think, you know, I should have probably waited, because we were pushing above the EMA and the market is switching. Look how EMA is not letting prices close below, and we are making higher highs and higher lows. So that's where I draw something like this, the trend line. Once again, I'm looking constantly for the bigger pattern. So as the downtrend is not playing out as I thought it would be, I have to switch the gears, because we are rallying up in the opposite direction, and the key entry and the high probability setups are going to be located at the key entry points. So as the market is coming off the highs, and we have a first leg lower pullback, second leg lower, they are not measured, but that's okay. The legs don't have to be measured. They are there. Two-legged move down. We have a tiny little break of this uptrend, but we instantly pull back higher, push back higher. So I wasn't really paying attention to this. This to me just looked like a little bit too much of a selling pressure, but we instantly rallied up higher on this big bullish bar. So this told me that a lot of sellers just got trapped here. And here was my second trade, because if you take a look on this new high right here that we made, this high is lower than this high. This is the first entry long, pull back lower, second entry long, but this is a bearish looking bar and you don't want to go long here. So once we made this higher low and another trap to go lower, because we ticked few ticks lower, trapped everybody in, and then instantly reverse higher off the key entry point, off the EMA. These are two key entry points confluence. The more key confirmation or key entry point you have, the better. And this was still part of this second entry. It may look a little bit congestive, so a novice trader can skip this. But you know, the key entry point is holding nicely. The uptrend is really valid now. The EMA is holding prices. The nice signal bar. I think the context is really strong. The downtrend played out with the break and a new low. And by the way, guys, I put my stop loss one tick below these lows right here. I didn't put it one tick below here. And the reason why I didn't put it below here, because this trade, this higher low, is still part of this first entry long, second entry long. We haven't reached the second entry long scalper's profit yet. Had you entered on this trade, you would have still been waiting for the target profit to be hit. So this is why you have to put it one tick below the entire swing and not just the signal bar you're entering, because a lot of times prices will come lower just to stop you out and then continue working higher. So remember, you don't want to be greedy here. It's, you know, it is much better to make the stop loss one or two ticks larger and be more safer and be safer because a lot of times prices will push back just a little bit, trap everybody out, and then continue working higher. So this is why I put my stop loss one tick below these lows as a second entry long, and not one tick below this bar. And prices kept working higher, and I caught my runner here. The runner looked strong, but it ended up being only like $200. It wasn't really strong because the market, the moves are not too big here. So it was a fairly decent runner. And you may be wondering why I'll scale down to only 3 contracts. Because I was starting to think that when I'm recording and the market is choppy, I stay away from market and I only take one trade because I don't want to overtrade. But at the same time, since I'm already recording, I want to show you guys how to enter the trades. So I want to be just a little bit more comfortable, because when I'm risking more and more money, you know, I don't want to, you know, jump the gun and lose a lot of money. So I'm scale back down a bit. I might even scale back to 2 contracts just to show you guys how to trade more trades, because I can sit here for 3 hours and take one single trade, no problem. But you probably want to see how to trade more contracts. So I scale down a bit. Still 2-1 for the day, not bad. And I was trailing my stop loss one tick below each new swing, and it ended up stopping me out right here. And I think I got as much as I could out of this runner. And then prices broke this trend line. And you can look at this 2 ways. You can either draw trend line like this and you have a break and a new low, or you can draw a trend line like this, that you have a break, you're going sideways, and then you have a new low. This is why I like marking this trade, because you just broke this uptrend. And this is the first break of this uptrend. You technically have a break right here, but this is not looking too convincing. This break right here is very iffy. This is a clear break. And I was expecting a new high. I wasn't already trading, but I was still watching the chart and answering emails, but I was expecting a new high to be made because this trend is looking still strong. So you have a break and you're going sideways. This is a no trade zone. This is a no man's land. The only way you trade the congestions is you fade the breakout. Fading the breakout is trading them in the opposite direction of the breakout. We broke higher, we pushed back lower, but we don't want to be selling because the overall trend is up, and we broke lower and a nice big green bearish bar, and you're still waiting for a new high. That's the point here. You're waiting for a new high, so you're going long hoping to catch a new extreme. This is a failed break lower. It is low. It is a big bar, so you want to probably put your limit order back, and trade would have went without you, but that's okay. The next time you may put the limit order back, it will nicely fill you and you will continue working higher. Just because it didn't fill you here this time, that doesn't mean that next time it won't happen. Next time you will get filled and it will keep going higher. But just remember, when you see the chop like this, it is very tempting to sell the highs and buy the lows. And every time you feel tempted to trade the market both ways, you're probably going to get trapped. You always want to lean more to only one side, only to buying or selling. So this is a no trade zone, and you want to skip trading into this because you can have a losing trade, you know, just like that. We broke up higher and we pulled back lower, and we are not pushing higher. We are struggling to make a new high here. So we're just going sideways, and this is why I like to be done early, because you really don't want to sit through this mess. But this was the last trade that I see. Good trade, but hopefully overall pretty good day. Just a reminder, you have to be willing to switch the gears. I really was ignoring the uptrend for the most part, and it cost me a trade right here. But once we it still don't matter. Price action is not that hard, and it gave you a chance to enter long right here after the confirmation of this uptrend. EMA is holding. So even though you may read the chart wrong, you can still get a good chance, because every single day there are like 2 or 3 really easy trades that anybody can see. So if you're just patient and you wait for these trades, it will reward you with profits. So hopefully you guys understand why I also am putting my stop loss 1 tick below this bar, below the swing, and not below this bar. This is the safer way. You don't have to worry about making your stop loss slightly bigger, because this is how the market works. They will come back and they will just make it 1 tick lower and then reverse it and go higher. And you don't want to be that guy who tightened his stop loss too tight and then got punished for this. So market will punish people who are afraid to trade. You have to put money on the line if you want to make some money. So don't be afraid to put the stop loss where it belongs, because price action structure will protect your stop loss. So I'm going to wrap it up. Hopefully you guys learned something from this video. If you did, if you're watching by this point, that means you're enjoying the content. So please hit the like button, subscribe to the channel if you haven't and you like trading. And I'm going to see you guys in the next one. Take care, everybody.